time to dive into the Schedule C. This is going to be pretty important. Now, the Schedule C, also known as Form 1040 Schedule C, and why is that? Well, because all these schedules, these are a part of the Form 1040. So Form 1040 does have a face. It's got the face. What we call the face is the main page, page number 1 of Form 1040. But then we've got Schedule 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then we only have 1, 2, 3. And then we've got Schedule A, B, C, D, E, F, G. And we don't have that many. I'm just making a joke there. So we will have a few that you do need to know that are important. Schedule C is one of them. This is going to be used by individual taxpayers to report income or loss from a sole proprietorship or a single member LLC, treated as a disregarded entity for tax purposes. Couple points to keep in mind here is that the Schedule C essentially tries to mimic a corporation's face of their return, except for individuals. So it really deals with your income and then your deductions for the business. So if I have a CPA tutoring business, not that I would know anything about that, but I would report my income there, my deductions there, everything there. But let's say I don't have a corporation, I don't have a partnership, an S Corp, anything like that. I am going to report that on my Schedule C. Also, single member LLCs. Why are we including this here? We'll deal with this more when we deal with business structures and the different types there. However, LLCs exists simply to give extra protection to your entity, legal protection. Remember, when it comes to business entities, we've got two important points. We've got taxability and we've got legal protection. So with LLCs, they give you kind of the best of both worlds. You get no double taxation, and double taxation exists only with C corporations. And you also get liability protection. So that's why we choose an LLC. We'll deal with this more, again, kind of with business structures. Disregarded entities means the IRS doesn't really view it as an entity. So if you legally, yes, you have an LLC. But if it's a single member LLC, meaning I personally own 100% of that LLC, I'm 100% owner in that, the IRS doesn't view it as an entity. For liability purposes, if someone sues me, sure, the LLC gets sued. I don't get sued. But me, as the individual taxpayer, I report everything on the Schedule C. And I will show you a Schedule C on the slide after this. We'll talk about that and dive into it more. Now, the income or loss from a Schedule C directly affects the taxpayer's gross income on their individual tax return, which is Form 1040. Now, as we see, again, this is technically called Schedule C 1040 because it's part of your individual tax return. It does flow into your individual return, and it's important to know where it flows onto your individual return to understand its impact on your overall taxes. Now, here's how the Schedule C income or loss impacts the taxpayer's gross income. Income here, it generates a profit. The net income is added to the taxpayer's gross income on the 1040. Now, if you do have a loss from this activity, so again, if someone, not me, for sure not me, had a CPA tutoring business and it generated a loss, maybe you only made $5,000 that year and you had $10,000 of expenses, so that'd be a $5,000 loss. Then that loss can be used to offset other sources of income on the taxpayer's 1040. That is a wild idea. Let's think about that for a second. So if you have a business, you can offset, let's say, your W-2 income. And you might be thinking, oh my gosh, that sounds fantastic. That sounds amazing. To which I'd say, yeah, it does sound fantastic. It does sound amazing. Because individual taxpayers, individuals, really have the least ability to offset their income out of any sort of entity, whether it's C Corp, partnership, LLC, anything like that. You really have zero deductions when it comes to your normal salary and wages income, other than 401k, retirement accounts, anything like that, healthcare benefits. Now, if I have a loss on my Schedule C business, I can take that and deduct it from my overall income. So that's super important. And we'll see this again. Promise you, we will see a Schedule C on the next slide. However, what is the drawback here? What stops you from constantly taking losses for your own quote-unquote personal business? You know, what's stopping you from starting your own business and saying, I take a loss every single year. I take a $20,000 loss every year because, you know, my subscriptions to HBO, Hulu, Netflix, those all go in. Well, first off, those wouldn't be legitimate business expenses likely. But also, let's say you had $20,000 of legitimate business expenses. You took a $20,000 loss on your business every year. There's something stopping you with that. We'll talk about that in this paragraph down below. Let's finish this up here, though. we are going to talk about this loss. This reduces the overall taxable income and may result in a lower tax liability for sure. However, we've got rules in place to ensure that the losses are genuine and not just a means to avoid paying taxes. That's what we're going to see here. For example, the taxpayer must demonstrate that they are engaged in the business activity with the intent to make a profit. All of this, just keep in mind, this is if you're audited. I mean, most things exist if you're audited. You can do whatever you want on your tax return. That's your own decision. You can totally fudge your expenses, put crazy expenses in there, understate your income. You can do all of that. Obviously, I'm not advising you do that, but that's, as we talked about in earlier lessons, we have a self-reporting tax system throughout the entire United States. So you can do whatever you want on your tax return. However, if the IRS picks it up through their automated software that determines, hey, that sounds a little odd what this person's doing, or if you get randomly selected for an audit, whatever that may be, yeah, you're going to be flagged and you're going to have to prove that not only was this business activity intended to make a profit, so if it's just a hobby or something, or if you're just doing this to straight up scam the government, yeah, they're going to know that this was not with the intent to make a profit. You have to prove that you were actively working to make a profit. If you showed no intention of making dollars, then that's a problem. If the business reports losses for 3 out of the 5 consecutive tax years, that's also something here. So if you want to, and I'll give you an example. This is not something I'm advocating for you. If you want to start businesses, definitely talk to someone who is willing to give you tax advice for their business. But ideally, what's the best way to keep a business going and in order to keep consecutive losses going? Well, if you have 3 businesses and for years 1 and 2, you have losses, then you take those losses for years 3 and 4. Then for business 3, you take those for years 5 and 6, and then you go back to business 1. Because again, if your business reports losses for 3 out of 5 consecutive years, the IRS, it says may consider, but I would assume they generally consider it immediately a hobby rather than a legitimate business. Now, in that case, the taxpayer would be unable to deduct the losses from their gross income. So if I have a CPA tutoring business, if I have a resale business, if I have any sort of business, and I claim losses for 3 out of 5 years, that is going to create a problem. The IRS, 2 out of 5 years, that's fine. It's kind of like give you a chance to make some money. Obviously, when you start a business, you'll probably start off with some losses. And even if you do have losses in that 3rd, 4th, and 5th years, you shouldn't really consider those losses because you're going to get called out by the IRS. They're going to consider it a hobby rather than a business. So that's kind of what we're doing. I'm giving you a combination of real-world knowledge as well as textbook knowledge. But this is also, very important understanding how this all works. So that is something we're dealing with here. Also, passive activity loss rules may apply, limiting the taxpayer's ability to offset non-passive income with passive losses. That's something we'll see in later lessons as well. Passive income has different rules for sure. Dealing with the mom and pop exception, dealing with net operating losses, any passive deductions, and losses. All right, I promised you, and here we are. I do follow through with my promises. Here is a Schedule C. And do you have to memorize everything here? No. Do you have to memorize this at all? No. But why do I have it here? Well, it's kind of important just for understanding how this all works. This generally does follow the same flow as a corporation. We've got income, we've got expenses, and then we've got final taxable income down at the bottom. But this will flow to the face of the 1040. Now again, schedules, Schedule 1, 2, 3, Schedule A, B, C, D, F, E, E, F, almost as if I don't know my own alphabet. Hey, that happens. These are all part of the Form 1040. That is important to know, is that this is part of Form 1040. But when we talk about the face of the 1040, that's the main part of it. So here you're going to report, hey, if you have a CPA tutoring business, you'll report your income here. Returns and allowances, subtract that, cost of goods sold. Generally, you probably won't be dealing with that. But let's say you have an online business selling clothing online. Yeah, you will have cost of goods sold. You will have returns and allowances. You'll deal with all that. You'll have gross income. Then you'll have other expenses such as advertising, commissions and fees, contract labor, insurance, legal and professional services. All of these great items, very common items that appear on the Schedule C. So see these here. And again, it's kind of basically just like a business tax return, except this is for an individual. Now, eventually you'll get to your bottom item, and then you're going to report that on the face of the 1040. That's how it all works. Well, it'll go to the Schedule 1, which eventually will make its way to the 1040. Definitely, I always recommend looking at all the tax forms, understanding how the flow works. Definitely also recommend you get a nice Excel spreadsheet. You can just easily Google kind of Form 1040 individual tax return, and it will come with all the schedules. You can plug numbers into those, and it will flow through, and it'll appear where it should on the face of the 1040. I think it's a great way. That's how I also learned how to do this. Maybe we'll include this in our course, and maybe by the time you join our wonderful sessions here, we will have that. However, it does change year to year, so that's kind of my hesitation with doing so. But it's very much helpful to look at the tax forms, understand what you're looking at, because this Schedule C, this could easily be a SIM. The tax forms make great templates for SIMs. The AICPA knows that, and they will very much for sure, they have, and they will continue to do, take advantage of them and make them into SIMs that you'll have to answer. And you'll do well on, because we're going to prepare you well, and you're going to do the work yourself as well. Here's an example dealing with a Schedule C. We've got, in this example, gross receipts of $80,000 and other income, such as interest or dividends, of $1,500. We've got expenses, and these are going to deal with advertising of $2,000, car and truck expenses of $3,500, commissions and fees of $1,000, contract labor of $8,000, depreciation of $3,000, insurance of $2,500, legal and professional services of $1,500, office expenses of $1,200, rent of $6,000, supplies of $4,000, utilities of $2,800, and wages of $10,000. Now, if you were ever wondering, what's the point of creating an LLC? What's the point of creating a corporation? What's the point of creating different types of entities? Now, that is covered in our business structures lesson. Also, generally speaking, and this is very generally speaking, again, not giving tax advice. I feel like I don't need to keep saying that, but I feel like it's just totally warranted. Generally speaking, there's not much differences in the taxability of what you're dealing with as much as liability. So for myself, I have started businesses in the past, and when it comes to taxes, there's not much tax benefit to creating an entity rather than legal liability for creating these legal entities. So the Schedule C is pretty solid. I'm going to be honest. I've done a lot of business that has gone through Schedule C, and that works out quite well. There's not much more tax benefit you can get. Obviously, as we go through lessons, you'll see the other benefits of other business types, other entities. I mean, hell, that is even a whole portion of multiple choice questions and SIMs you could see from our business structures lesson is what is the ideal type of business structure for a particular individual or group of individuals based on their needs. So that's also something that you will see. But generally speaking, tax-wise, Schedule C, this is pretty much all you'll ever really need. Again, there's exceptions for sure. So for step one, what's our total income? We've got total income of gross receipts and other income. So we've got $80,000 of gross receipts from up here, interest or dividends of $1,500. Now you might be saying, well, did you earn that or did the business earn that? That's a great question, and it depends. If the business earned that, let's say this is a car repair business, and any money you made from that business, you separately put into a separate bank account and said, this is for the auto repair business, and that money earned interest or dividends, that's going to be $1,500. So it's going to be applicable to your Schedule C because that was not your own personal activity that dealt with the auto repair business. Now, total expenses, we got total expenses of pretty much everything we see here, right? We see advertising, car and truck expenses, commissions and fees, contract labor, depreciation, insurance, legal and professional services, office expenses, rent and supplies, and utilities and wages, all that good stuff. Really nothing too tricky here. This example is not here to give you any tricks. Pretty much to show you how it works, and all of these things, or most of these things, can be traced to a direct item on the Schedule C. There are, just like the Schedule K1, there are other spaces where it says other items, such as other income or other expenses, and some things are not directly listed, but generally speaking, these are pretty straightforward expenses you'd see on the Schedule C. So net profit is going to be $81,500 minus $45,500, giving us a final answer of $36,000. Now, the taxpayer's net profit from the business is $36,000. This amount is going to be reported on their personal income tax return, which is the Form 1040, which this is part of the 1040. Just remember that. And is going to be subject to income tax and self-employment tax. Make sure you memorize that. You know that. You'll be good to go. Lots of good examples. Let's keep running through a few more slides and we will be done. Here is another great example. We've got Sally Wise. Sally Wise does happen to be an attorney in private practice. So this is, just think about a lawyer, works for themselves. For the current year ended December 31, Sally had the following items of income and expenses with respect to her law practice. Now, Sally's going to have gross revenue of $350,000. All right, pardon me, Sally. You earned a lot more than I thought you did. Rent expense of $30,000. Wages paid to employees of $75,000. We got a bunch of items here. I'm not going to read them through because I feel like I read through on the previous example, but let's talk about how they all apply in our examples. Now, before calculating Sally's taxable income on Schedule C for the law practice for the current year, let's address the specific concerns in the question. What are the wages paid to Sally? Well, if wages paid to Sally, they're going to be considered a draw, not an expense. And this is something we'll see a lot more when we deal with S-corps and partnerships. So any wages paid to the owners of this, so wages paid to Sally, these are considered a draw. And as we deal with legal entities, we'll talk about basis. We'll talk about the base formula. So base formula being beginning, addition, subtraction, ending. That's not specific to tax. That deals with pretty much all the exams, whether it's beginning balance of an account for financial purposes and ending balance. That's a general formula, beginning, addition, subtraction, ending. So wages paid to Sally, Sally has an initial basis in this entity, and then wages paid to Sally would be a subtraction. That would be a withdrawal, a deduction from basis. So Sally will not be deducting this as an expense on Schedule C. That is something to keep in mind. We'll deal with this, again, a lot more as we deal with the actual legal entity lessons there. Yeah, only 50% of business meals are deductible. That's a pretty straight up rule unless it says otherwise, unless it says that the meals were going to be used for overall just business purposes, unless it specifies 100%. So the deductible portion's only going to be $2,500. Now, health insurance for the taxpayer, known as Sally, is not deducted on Schedule C, but it's 100% an adjustment for AGI. That's something important to note that, yeah, where is all this going to go? That's actually very important. Where is this going to go? It's not going to go on the Schedule C, but it's 100% an adjustment for AGI. Therefore, the $3,000 will not be deducted on the Schedule C. This is why I bring up the tax forms so much, and we'll continue to do so throughout our lessons. Where does each item go? That is up to you to, I'll obviously provide tax forms as best I can, but very much recommend that you look where are each of these items going. That's going to help you and save you a lot of points on the exam. As a cash basis taxpayer, the business bad debt loss allowance would not be deductible. So the $4,000 business bad debt loss will not be deducted on Schedule C. This is the allowance method. This is talking about the GAAP, FASB, accrual basis method. We're not going to worry about that here. And lastly here, state income taxes for the business are not deducted on Schedule C. Rather, they're going to be an itemized deduction. So the $12,000 state income taxes will not be deducted on Schedule C. Again, very important you understand the different schedules, where everything goes. We'll see the Schedule A in our adjustments to income. That's why, again, I will say, feel free to run through all the lessons, get a good run through, understand how they work, and then revisit them. That's totally fine. Also, practice as many dang questions as you can. That'll get you in a good place. Now let's calculate Sally's taxable income for Schedule C. We've got our gross revenue is pretty simple. Revenue will generally much be more simple than expenses. Expenses are going to be the heavier portion. And we see all the expenses here added up together. So take a look what we kind of took from all of these items here. Final answer is going to be $350 of gross revenue minus the total expenses of $159,500 gives us $190,500. So Sally's taxable income on Schedule C for the law practice for the current year will be $190,500. Another great example. Love providing examples for you. Hopefully you appreciate it. Hopefully you are taking these to heart. Make sure you're able to do these by yourself as well. Keep practicing. You got this. A few more slides and we will call it a day. Here's another one, not too in-depth as what we have been seeing, but Dr. Joy is a self-employed chiropractor. I myself am quite a fan of chiropractors. They have done wonders for me. My back is just to call it a mess would be an understatement. So thank you if anyone out there is a chiropractor in addition to studying for this exam. We got a couple items here. We got investment expenses, custodial fees, work uniforms, subscriptions for periodicals in the waiting room, and education seminar expenses. So what is the total amount that Dr. Joy can deduct as business expenses on Schedule C? That is a wonderful question. Now, what is our explanation? I mean, we see the answer here, but how do we get there? The deductible expenses are the uniforms, because what are we doing? We're buying uniforms for the employees. That's deductible. That's an expense necessary for our business. Subscriptions for the waiting room, that's deductible. There's no reason it wouldn't be. And then the seminar. Now, there are many questions that we'll ask as well, and within the multiple choice section, to talk about, hey, you went on a trip to a foreign country, and you went for 7 days. However, 3 days of those were for a business seminar. The other 4 days were for vacation. Simply put, you need to allocate the expenses properly to when you were attending the actual business expense. So if you went to your seminar and you incurred expenses for those 3 days you were in the seminar, and then the other 4 days you went on vacation and enjoyed it, well, obviously only the expenses during those 3 days you went to the seminar will be deductible. Everything else is not going to be deductible. So that's just something to keep in mind as well. The investment expenses and custodial fees are 2% miscellaneous itemized deductions. However, they're not deductible beginning in 2018, kind of dealing with what we saw before when it came to those 2018 to 2025 expenses. Again, understanding where all these items go, it really does feel like in this exam, you have to have that meme or that idea of the big brain of just all of your neurons firing at once, closing your eyes and understanding and visualizing all of the tax forms at the same time, knowing where everything goes. It's intimidating and it's a lot. And I'm not the person to deny that. It is for sure true. You can do this. It's just going to take a lot of work, but with our help, you'll do it. It's going to take a lot of work on your end, but you can for sure do it.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.